Hello everyone, thank you for zooming in. I'm Rachel Freeman and I'm a partner in the Family and Divorce team at Kingsley Natley. This is the first webinar I've done actually, so it's nice to see everyone. So now that it's been 4 months since lockdown, we thought it'd be helpful to give you our view on how the pandemic is affecting our clients and your clients who are going through trying to sort out their financial settlements on divorce. We'll be speaking for about 30 to 45 minutes with time for questions afterwards. I'll try to keep it within that time. So please do feel free to put your questions in the panel at the bottom if you have any, and we'll answer those. And we are recording this, so if you have to go or you want to send it to any colleagues, we'll send it to you afterwards. So when lockdown first started, most of the new inquiries that we had were relating to the arrangements for children. People were worried about what would happen to child arrangements, existing court orders, how could they be complied with when we went into lockdown. We were not getting many new inquiries for divorces because of the uncertainty, but now we're 4 months in, we're certainly seeing an increase in divorce inquiries. People are seriously thinking about divorce. Some don't want to embark on it because of the uncertainty at the moment, which we're going to speak to you about, but some people are just headed straight into divorce. We're also seeing people trying to take control of the situation as much as they can, so more prenuptial agreements, inquiries about those, and postnuptial agreements. So for example, if someone's about to receive an inheritance or a chunk of money from their parents, they're thinking about how should that be dealt with if they do divorce. So I think people are looking for the modicum of certainty that they can achieve in this environment. So our talks today are really our views on the uncertain issues. So we're looking at the valuation of property, including the family home, valuation of businesses, and variation of maintenance orders. And I'm here with my 3 members of my team: Sital Fontenelle, Connie, Atkinson, and Cady, Pearce. And the first speaker is Sital Fontenelle, who's a partner in our family team, and she's going to talk to us about valuation of properties, including the family home. So welcome, Sital.
Thank you. Good afternoon, welcome, and thank you everyone for joining us. I'm just going to touch briefly really on what an uncertain property market adds to an already difficult time for my clients when we are negotiating financial settlements. And it certainly, in my view, adds another layer of complexity for divorce lawyers. Now, you'll all be aware that the Chancellor is expected to announce a stamp duty holiday today on properties up to a certain value, and let's see what impact this has, if any. Certainly for my clients, I think very little, given that they are in London, in the south, and generally speaking at the high value end of the property market. The family home really upon divorce is seen as the key asset in the case. It holds sentimental value, it's the children's security blanket, is close to the school, close to friends, and particularly nowadays close to grandparents as well. And therefore, as divorce lawyers, we always look at the family home very carefully. The family courts, as many of you would have heard, has remained remarkably open throughout this pandemic. And I never really thought I'd say this, but I've had many virtual hearings now, and in fact I'm at a point where if I have to have a in-person hearing, it's going to be quite difficult knowing how to act. So what's happening at the moment? The courts will expect values to be attributed to all real estate, regardless of how uncertain the market is. And let's not forget, even in the financial crises of 2008, the court was still carving up matrimonial settlements. Now, first instance, the values would need to be agreed between the parties. And needless to say, it's not always easy to do so. Parties often take a tactical position. Just this week, on one case where I'm acting for the party who wishes to remain in the family home, that we are in the midst of a pandemic, recession. It's looking like an L-shaped recession, and all of these measures by the government is doing very little to the property market, and certainly has impacted the London property market with a lack of international clientele. Of course, the converse is true if you're acting for the individual who wishes to vacate the family home, who will be portraying a much more positive picture. So where a value cannot be agreed, the parties will jointly appoint a surveyor to provide an expert report. You do need the leave of the court, and I would certainly advise all lawyers in this scenario and climate to instruct a surveyor, a specialist surveyor who is particularly familiar with their location and the type of property that you are dealing with. So for example, I've got a case where a 7-bedroom property has decreased in value considerably in the Mayfair area. Whereas another client who has a beautiful country home in Oxford with an outbuilding that he uses as an office and ample outdoor space, as you can imagine, has seen an increase, and the estate agents have asked him to put the property on the market ASAP to take advantage of the current climate. So what do you do to dispute an SJE report? Well, as you will imagine, it's very rare as a divorce lawyer that either client will be happy with a single joint expert's report, particularly, as I said, given the sentimental value that the matrimonial holds to each of them. And so what you've really got to look at is, how do we attack the report? And the normal way to really do so is looking at the comparables, because that's what the SJU will be relying on to value the family home and other real estate. What I'm told, having spoken to a number of experts during this lockdown, is that there still remains 2 major issues when drafting up these reports. First of all, not all properties can be visited for a number of reasons, and so they're reliant on virtual valuations, and also that the ones that have been sold are all pre-COVID figures, and so that's the comparables they are relying on. Yes, there have been an occasional sale post-COVID, but not as many to allow for comparisons, and therefore what we are having to do is rely on these experts' judgments to then discount as they feel appropriate. And what they feel is appropriate will depend on how they view the economy and the housing market. And as you know, just reading a few articles from housing experts, economists in the area, there's mixed reviews on where the housing market is going, where the economy is going, is it L-shaped, U-shaped, and all the other letters in the alphabet. In fact, a lot more, this is the type of things that my audience knows more about than us divorce lawyers do. So we, no doubt, you will all expect phone calls from us on these points. So the court options in respect to the family home. With regards to an uncertain market, the most safest way, and certainly what I'm advising my clients at the moment, is to look at, particularly the London clients and the high net worth individuals, is to look at what's known as a deferred sale. So you look at a sale of the property in a year's time. Hopefully the market would have picked up. Let's see where we are with the vaccination scheme. And that may be a time to actually sell the property to optimize the price. And what we would also do at that stage is look at ordering a percentage so that both parties share in the risk, but of course with a bottom line for usually the vulnerable party, who is the primary carer. The court, generally speaking, when we're not in a pandemic, likes to try and at least have one party, usually the primary carer, to retain the family home, because of course there's cost of sale and cost of purchase to be taken into consideration. But certainly at the moment it may be that the safer bet is to look for a sale given the uncertain market. So in summary, the family courts are very much open, and I've certainly, as a divorce lawyer, seen an increase in the need for surveyors, estate agents, IFAs, wealth managers to advise us on very, very difficult circumstances to ensure that we get the right results for our clients.
Thank you, Sital. That was great. We all love to hear about property. A very interesting time. Now on to Connie Atkinson, who's a senior associate in the family team, and she's talking about valuations again, but this time valuations of businesses, which can be tricky at the best of times. Thanks, Connie.
Thanks, Rachel. So yeah, it's clear that the pandemic is adding an additional layer of stress to our clients at the moment, going through a divorce and separation. Many of them are still living together. There may be a financial strain on the family, and they've not got access to their professionals, so their legal advisors, their accountants, therapists, that they in the same way that they're used to. So it's a different and challenging time. We've also heard a little bit about the changes to the court process, which sometimes does bring some difficulties as well. So in my view, that divorce is taking place where there's a business involved is particularly difficult at this time, and that's what I'm going to talk a little bit about now. So when parties are getting divorced, they each need to provide full and frank disclosure of their assets on a document called a Form E. The Form E records their assets, their liabilities, their incomes, and also their needs, so their income needs and their capital needs. And if you're going through the court process, then each party are obliged to prepare their Forms E. But it's fair to say that when we're looking at the financial arrangements outside of the court process, so through mediation or looking at arbitration or negotiation through solicitors, then we use the Forms E as well, because we all know that the format that the information will be provided on. So for a business owner getting divorced, they'll have to put details of their business interests on the Form E. And if the valuation of that business isn't known or isn't agreed, then we appoint a single joint expert to prepare a valuation that the parties can use for the purposes of negotiations and that the court can use in due course if required. It's also not uncommon to appoint a shadow expert to provide us with some independent advice in the background to assess the information given by the single joint expert. So the need for disclosure and the need for valuations is still happening even during COVID-19, but we're having just to adapt to what that process involves. It's fair to say that prior to COVID-19, we'd get different valuations in respect of the same business, and judges treat those valuations in different ways as well. So, for example, considering what element of a business is matrimonial. So there was already some uncertainty, but in the current climate, there's even more uncertainty, unfortunately. Now, it depends on the sector, of course, but experts that I've spoken to have advised that they're going to possibly have to give valuation ranges within their reports, or for their valuation reports to use assumptions in the COVID scenarios, but also different assumptions outside of a COVID process, so that there's a range of information available. We're not going to know the full impact of COVID-19 on the economy and the market, maybe not for many months. So we are talking to our clients about what they need to consider and perhaps be creative about the overall financial settlement, which I'll come on to talk to a little bit later. So looking then at the use of experts in proceedings, so we ask the single joint expert to prepare a valuation of the business, but also looking at its liquidity, its income producing capacity, and the tax effects of extracting money from the business or of its sale. Depends again on the type of business, but the valuation method is usually one of capitalized earnings, which looks at the future income. And while experts have told me that methodology is unlikely to change, it may be that the assumptions that they take into account will need to in the current climate. We've also been told that other methodologies may be more appropriate or useful as well, such as discounted cash flow, because that looks at trading losses, or valuations based on the assets in the company. So then looking at a business owner's role. So as I've already discussed, they're going to have to provide details of their business interests in their Form E. And I normally advise clients to be upfront and provide as much information as possible as early as possible, because this means that hopefully settlement discussions can take place sooner rather than later, but it also avoids the or limits the time and the cost of going back and forth asking for information from the other side or from the expert. Business owners are going to have to speak to the expert as part of the valuation process, talking about what their company does on the ground, their client base, the past performance, but also any predicted profitability. When out for clients who are the partner of the business owner, they often have concerns about those discussions and the neutrality of the information being provided. And so it might be that we want to ask the experts to give notes of the discussions that they had, or to explain in their report how the information has impacted on their valuation. The business owner is going to have to provide information to the valuer, such as any government loans or furlough schemes that's taken advantage of, discussions with their finance team or accountants in respect of measures undertaken to protect the business in the current climate, the impact of COVID, to discuss any assumptions about future performance, income or expected redundancies. In respect of the documents that the business owner is going to have to provide, well, they'll need management accounts, any forecasts, copies of the government loan applications if taken out, recent sales and profit figures, their order books, details of their key customers and suppliers and whether there's been any difficulties in the supply chains, information about future income, if any big contracts have been cancelled, and also things like minutes of board meetings where COVID-19 and its impact has been discussed, or how to mitigate it has been discussed. And we also ask them to talk to us so that we know what's going on the ground. You know, are they able to meet their interim needs still, the family's interim needs? Are there any planned purchases either as part of the business or for the family, or can they still be achieved? And also just talking to them about the time that this process takes. You know, we've been in lockdown and they might be managing difficulties in their business, but also they need to speak to their lawyers, they need to collate information, they might need to speak to the valuer, they might have a conference with counsel and court hearings coming up, and all of that can take time. So we just talk to them and help set expectations about that. So it's clear that COVID-19 is having an impact on valuations, and we're all, the experts, the solicitors, the courts, are just going to have to do what we can with the information that's available to us. There may be changes to profitability. Businesses may be impacted by taking out government loans because their debt position has changed. Business owners may want to retain cash in the company so that it helps with liquidity while income has slowed or ceased. And so we just need to ask the experts how they've considered those factors as part of the valuation process and why any particular variables have been used. And then just looking finally at what business owners will need to do. Now it's going to be fact specific, but again, they need to take advice. The valuer is going to assess the short and medium term impact of COVID-19. And so we're talking to clients about whether they want to pause negotiations or court proceedings just to give time for the economy to settle, and hopefully so that some clearer information will be available. The difficulty with that is it may be one party's interests to value the company now, when it may be perhaps lower than it otherwise would have been. So it's looking at the balance of those different arguments and priorities for each client. For those who are in court proceedings already, there are some delays with the court system because of hearings that didn't take place at the start of the process, start of lockdown, or urgent hearings that having to take place. But reports are still taking place, and as we've heard, court hearings are still going ahead, and it may be that experts need to update any recent reports that they've provided, or provide reports that use COVID-19 data, but also those based on more historic data that will place less weight on the current climate. So there's a different background against which to consider the information. Unfortunately, that could increase costs and uncertainty, but it's what we might have to do for the time being. And then finally, we're talking to clients about coming up with creative solutions to help manage the economic uncertainty. So in terms of financial settlements, that might include deferring lump sums payable to the non-business owning spouse, and for those figures to be based on future performance. Or it may include lump sums being payable in instalments, because this allows for the possibility of variation if needed in the future. Or a spouse could instead retain or acquire an interest in the business to help share the risk. Or parties just may decide to share assets in a different way to that which a court would normally do. And that would just be taking into account their particular concerns, the climate, and also the priority of each of the parties. And so we're in uncertain times. There's no right answer, but the clients, experts, lawyers are doing the best we can to navigate the financial proceedings in these currently uncertain times. Thank you.
Thanks, Connie. Lots and lots to think about there for business owners who are also getting divorced. And now we're on to Cady Pearce, who's a senior associate in the family and divorce team as well, and she's going to speak to us about variation of maintenance. Hi, Cady.
Hi, thanks, Rachel. So lots of people, our clients included, are worried about how they're going to make ends meet now and in the future. And as Connie and Sital have touched on already, many clients are looking at a different financial future, which could involve short-term or maybe longer-term change. For example, some banks have already said there won't be bonuses this year, and some businesses have reduced their distributions. And some clients have got issues like these, which they hope are short-term, but some might have longer-term problems. Those paying maintenance to an ex-partner and or for their children may have particular cause for concern in these current difficult times. If they can't make ends meet and pay the maintenance that they're required to under a court order, they'll have a court to answer to unless they can take some appropriate steps. Taking action early is key. If any of you have clients who are worried about their ability to pay maintenance, please advise them to act quickly. If they don't pay, they are in breach of a court order. This is the case even if they later show that maintenance was unaffordable. Breaching a court order could have a number of consequences. It could see the client paying interest at 8% on an outstanding sum. They might have court proceedings issued against them. And in extreme circumstances, breaching a court order can result in committal proceedings, i.e. proceedings where you are told to pay or go to jail. These negative consequences can be lessened, if not altogether avoided, by the party who is or expects to be in difficulty, contacting their ex and telling them what the issues are. Ideally, the client would approach their ex-partner with a suggestion of what short-term steps could be taken. So building on kind of what Connie was saying, if your client has a business and they can't declare a dividend now, maybe they can move things around to get their partner some money in the interim, their ex-partner, sorry, and give them a bit more in compensation in 6 months' time when the business is doing a bit better. And that's just one example, but the point really is that there are lots of practical options that can be taken if the parties are able to talk to one another, or maybe if they're only able to communicate via lawyers. If these discussions follow an acrimonious divorce, though, that's quite a big if. So what do we do and what could you do if your client can't get anywhere with their ex? If an agreement can't be reached, then the party receiving maintenance could issue court proceedings to enforce the unpaid maintenance. At a basic level, enforcement proceedings involve a court or a court official or a judge looking at what assets and income the paying party has and how their resources can be applied to meet the debt owed to the receiving party. Enforcement is just that, and it's important to remember that enforcement looks backwards at what's owed, not forwards at what's affordable in the future. If you, as the paying party, want a court to reduce maintenance going forward and agreement can't be reached, you might need to issue variation proceedings. Variation and enforcement applications can sometimes be heard at the same time, with one party enforcing unpaid maintenance and the other party saying that maintenance going forward needs to be reduced. Variation proceedings tend to be more involved than basic enforcement, because rather than just looking at the paying party's ability to pay and how they can get the sum across, both parties' needs and resources will need to be considered. Both parties will have to provide financial disclosure of the type that Connie was talking about, not just the paying party. If enforcement or variation proceedings are on the cards, your client needs to come to court with clean hands. We want the judge to be on their side, or at the very least not against them from the beginning. Obviously, judges decide cases based on facts before them, but they're people too, and I think that's something useful for us all to remember. We want them to see our clients as reasonable individuals. In a case about reducing maintenance, an early warning that changes are needed will help achieve that. And no matter how difficult things are or how difficult they have been in the past, we would always advise clients to alert their ex to potential cash flow problems, which might mean that maintenance can't be paid, as soon as they become aware of them. And this early warning approach applies for clients with short and longer term difficulties. One of the problems that clients with longer term maintenance issues have got is that they might find it harder to reach agreement than those looking for a shorter term fix. So it could mean that they are more likely to face court proceedings, or they might need to use one of the ADR methods that Connie and Sital have touched on. So mediation, private court proceedings, or possibly arbitration to resolve things. It's not all bad though for clients with longer term problems who need to vary, because unlike those in a shorter term situation, they could look at the option of capitalising their maintenance. If I was acting for the party receiving maintenance and they and I thought that it was genuinely unlikely that the paying party was going to return to the level of earnings on which the initial order was based, I would likely advise my receiving client to think how much capital they could get now by way of capitalised maintenance. So instead of receiving X amount month per month, they just get one lump sum and they get it now or in quite short order. Dependent on the particular circumstances of the case, this could be a really good thing. The receiving party might feel freed by knowing that their last financial tie with their ex has been cut, even if over a period of, say, 10 years, they end up receiving slightly less overall. The reason that they might receive slightly less is because capitalised maintenance is often discounted to reflect the benefit to the receiving party of getting money in their pocket now. If I was acting for the party paying maintenance and thinking about capitalising, in addition to the discounting, I'd probably be looking for a clean break. This means that the court makes an order saying that maintenance is at an end permanently. If I capitalise maintenance to get a clean break, I lose capital now, but the benefit to me is that I know that this is it. The receiving party can't come back for increased maintenance, and so any increased earnings that I might make after the clean break are mine. Whether capitalised maintenance is a good solution will depend on the capital available and each party's assessment of the risks and rewards, but it's something worth considering if your client wants to or could be facing variation proceedings. Those of you listening who have got access to cash flow modelling software, you might be able to offer some really useful input to clients in this situation. For example, if they give away a chunk of capital now, what does this mean for their future? And if your client, on the other hand, is the receiving party, will the capital sum that they're getting enable them to meet their needs going forward without any ongoing maintenance? You might also be able to help them consider whether any other elements of their financial plans could be altered to help make things work. And I think this is a scenario where if we had clients who didn't have a financial advisor, we'd likely tell them to go and please speak to one. Moving on briefly to child maintenance, lots of the points I've already covered could apply either to spousal or child maintenance, but there are some additional points to bear in mind if you're dealing with child maintenance. We don't often deal with cases where the child maintenance service is involved, because if someone earns over £156,000 per annum, then the court rather than the CMS will deal with child maintenance. However, when a court has made an order for child maintenance, once 12 months have elapsed from the date of the order, the paying party can ask the CMS to assess their child maintenance obligations if they now fall below the relevant threshold. And that might be the case if their income has reduced and they're now looking to vary their maintenance. This is a pitfall to really watch out for, because unless the drafting of the initial order dealing with the child maintenance is sufficiently tight, the paying party can reduce sometimes quite drastically the amount of maintenance they're paying, but without breaching an order, which means that the simpler form of enforcement proceedings is not going to be available. Indeed, the paying party might just argue that they're doing what the CMS requires them to do, which will, if you're the receiving party with a lot less, is likely to be very annoying. Another element which is often separate from but related to child maintenance is school fees. If there is an order to meet school fees, and that's going to be difficult, either in the short or long term, this should be raised and considered as part of the discussions or proceedings relating to variation. Again, those of you with cash flow modelling software might be able to help here, particularly if there are only short-term issues which require some kind of bridging finance. In summary, I think we'll all sadly be encountering more clients who need to vary their maintenance or who are trying to enforce unpaid maintenance in the coming weeks and months. My overarching advice is that clients should act early. They should give or get as much information as possible, dependent on whether they're the paying or receiving party. And they should be prepared to review their financial plans. Really, they need to be prepared to look at things again to try and create the best financial future they can, however different that might look to what they had in mind in a pre-COVID era. Thanks.
Thanks, Cady. That was great. Lots of practical tips there. Right, I don't have any questions on the Q&A panel. I hope that means we've answered all your questions in the talk. I'm just going to ask a really quick question. We're now 12:32. I think we've got time for just a quick question. If I can ask Sital, if one of our clients had entered into a financial settlement as part of their divorce before the pandemic, based on a pre-pandemic valuation of their house or property portfolio or business, is there anything they can do, or are they stuck with the deal that they've done with their former spouse?
Oh, Rachel, you asked me a question which is probably going to take me a couple of hours to answer. So let me start. No, I'm only joking. The question is hotly, as you know, debated amongst divorce lawyers. We've been debating it since we went into lockdown, and we're still debating it. Really, the test is whether there has been an unforeseen and significant change in the financial circumstances to allow one party to open up an already approved court order. For public policy reasons, as you would imagine, this is a very high threshold, and in the case of Barda, which is a well-known family law case, tragically one of the parties died soon after a financial settlement was achieved. So is a property valuation recession a Barda event? My view is where the parties have settled a deal under eyes wide open. Could they argue Barda? Probably not. I know there's been lots of debate as to whether they could argue it in January when we didn't foresee it, but should we have foreseen COVID, or should we have realised the impact it would have had on the economy? Who knows? Usually a recession isn't seen as a unforeseen circumstance, but I know there are lots of commentary out there about whether this is actually a straightforward recession. Isn't this akin to actually a war? So let's watch the space. I think there'll be many cases to be coming on the Barda position.
Thanks, Sital. Thank you. I think that's it then, really. Thank you everyone for your time. We're going to send you a recording of this in case you want to share it with your colleagues. But thank you so much. And if you think of anything after the event that you'd like to ask, do get in touch with us and we'll be delighted to carry on the conversation. Thank you very much.
Thank you. Bye-bye.
Thanks, everyone.
Thank you. Bye.